Hello, chart watchers, and welcome to this Monday, April 29th, 2019 Market Watchers live show with your hosts, Tom Bowley and Greg Schnell. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's take a look at what's going on in the market so far. We've got the Dow Jones Industrial Average currently up 3 points, the S&P 500 up 3, the NASDAQ up 8, and the Russell 2000 leading on a relative basis up 7.5 points. You can see trading at a 2-month high, trying to get through that 1600 level. 10-year Treasury yield higher today by about 3 basis points, 2.53%. That is good news in the sense that at least money is rotating away from the Treasuries, and that money is able to help fuel an equity rise. Volatility index currently up 1% today, but I think the overall downtrend remains in play. XLF, XLC leading the market charge to the upside. XLU, and not shown here, but also XLRE, real estate, struggling on a relative basis. In that financial space, though, banks clearly the leader. This is a pretty good breakout here on the banks to the upside. We'll take a look at that in just a bit. Two of the big banks that are leading today, you can see JP Morgan breaking out of a bull flag. Nice move up, sideways consolidation and breakout. Bank of America, same thing. Move up, sideways consolidation, breakout. So we're seeing some really bullish action in the banks today, and that's a good thing with the 10-year Treasury yield moving higher. It's giving it a little bit more impetus here to the upside. All right, well, we got Greg Schnell joining us today. It's been a while, Greg, but welcome back to Market Watchers Live.
Hi, thanks, Tom. Yeah, it's been like 6 months or something. I think it was October or November, so it seems like a long time, but thank you for having me back.
Always great. Always great to have you back. But I did see that Calgary was blanketed with snow. So what the heck is going on with that?
You know, it was so funny. I played golf on a relatively nice day on Friday, and then Saturday we got a freak snowstorm, and it was, almost a foot of very wet snow, just blanketing the city. The roads turned to ice because the roads are warm, the snow's cold, makes ice right in the middle, and everything was mayhem for 24 hours. It's starting to get back to normal. The heat's coming back. But yeah, we get the freak snowstorms here, and they literally are messy to deal with. So everywhere is a slush puddle today. So, yeah.
Yeah, I think it was probably about 2 weeks ago. I'm down in South Carolina on the north side, so I'm not too far from Charlotte, North Carolina. But we got snow 2 weeks ago, and it was that wet, slushy kind of a snow. And I was thinking, okay, I can't imagine, living somewhere where you'd get snow after the middle of April. And then I saw the snow in Calgary. And I was like, oh, Greg Schnell lives there.
Yeah, and it can snow every month of the year here. We can have beautiful sunny days in the 90s, and we can have snow the next day. So that just happens. Yeah.
I mean, up in the mountains, or not in Calgary, but in the mountains, you get the snow.
We can get it everywhere. Yeah, we've had snow every month of the year in Calgary historically. Not every year, but we've had a July snowstorm, an August snowstorm, a June snowstorm, a May snowstorm. So, yeah.
Okay. I'd have my for sale sign. If I saw July snow, I would definitely have the for sale sign in my front yard. I'd be out.
It only sticks around for a day. It's almost funny, but yeah. So.
Well, yeah, that would be funny unless I had a tea time. Anyway, we got a lot going on. Let's go ahead and go through today's agenda. But first, let's go through the upcoming schedule. Tuesday, tomorrow, we've got Erin's workshop. And then on Wednesday, we'll be welcoming her dad, Carl Swinland, to the show. So that'll be fun. A lot of decision point there. And then Thursday, Bruce Fraser joins the show, Mr. Wyckoff, or one of the Mr. Wyckoffs. So lots on the agenda for this week. And then for today, you can see Monday setup. So Greg's going to join me for Monday setups this week. And by the way, Erin had a really good setup from last week, and we'll be talking about that as well. Earnings Spotlight will be, I'll be showing you some stocks that had great reactions to their earnings. So some of my favorite stocks that are on my strong earnings chart list I want to talk about today. And then we'll do 10 in 10, Lazard Limited, LAZ will be the first stock I take a look at. I will annotate it, and along with 9 others. So if you want to take a look at LAZ, see what you think about it. You can see if you agree with me. And then we're going to wrap up with a new segment, What's Wrong with This Picture? And Greg is going to be featured in that segment, and I'm going to give him a number of stocks, and he's going to try to explain what is going on and what's wrong with the picture. So you want to stick around with that or for that for sure. Okay, let's go ahead and get into our key technical news and headlines today. Here we've got the earnings report. So let's go ahead and take a look at some of the earnings first. Spotify, SPOT, you can see also coming in with a big miss there, along with restaurant brands. But we did have a few really nice reports that came up. Lowe's, CNA Financial, and On Semiconductor. You want to take note, because after the bell today, we've got Google, CNI, NXPI, SBAC, CLR, and WDC all reporting, and along with a lot of others. And that is going to accelerate. The pace of earnings coming out this week is going to accelerate throughout the week. So you'll definitely want to keep an eye on the earnings calendar, especially if you hold stocks and you don't like to hold them into earnings. You may want to double check on their earnings dates and make sure you're not caught by surprise, because we just never know which way these stocks are going to go. And we'll take a look at some of those charts in just a minute. But let's go into the economic reports this morning. We did have a little catch up. The personal income and personal spending for February, I think this is the last of the catch up for the government in terms of the slowdown that we had at the beginning of the year, or the shutdown, I should say. So some of these reports were coming out slow, and this is the final catch up on the personal income and spending. You can see for February, the numbers came in slightly below expectations. March was a mixed bag. Personal income came in slightly below expectations there, and personal spending was a little bit above. Probably the most important number, and this is something that the Fed watches pretty closely, March core PCI price index, flat versus the 0.1% of a percent increase that was expected. And that tells me that maybe the Fed is going to be a little bit more concerned about what's going on with deflation than with inflation. And we know they, back in December, flipped from being more hawkish to being dovish. So this is going to be an interesting development, I think, as we go forward. I was talking to Greg before the show, and there's a lot setting up in the market right now, very similar to what we had back in the late 90s. We've got a dollar that's on the rise. We've got inflation that is tame. We've got commodity prices, the CRB index, which has been under control. And the stock market in the late 90s, of course, took off to the upside with low interest rates and low inflation. That can be a very, very solid combination for equities. So we'll have to keep an eye on that. Let's take a look at the 10-year Treasury yield. And as a result of these economic reports that came out, and you can see we remain in the downtrend. We are up today. So we're up about 3 basis points. But overall, the downtrend remains. And so I think the equity markets are really enjoying this period of better than expected growth. We had the first quarter GDP last week come in at 3.2%. Market was only expecting 2.3%. And you would think, okay, well, if economic activity, GDP picking up, that could increase inflationary pressures, but it's not. We actually have what could be more deflationary types of pressures, and that could keep the Fed on hold or maybe even lower before they raise. And I think the stock market's really excited by this, and I think that's one of the reasons why we are seeing moves to record territory on the S&P 500 and NASDAQ so far. Okay, now let's take a look at some of the earnings reports that came out. I'm going to start with Spotify. They did come in with a bad number on their bottom line, but I don't think traders are really looking at this point for Spotify to post any profits. I think instead it's about building subscribers. And you can see Spotify here, not too far at the open today from its high that was set back in February. I just think we're going sideways here on Spotify for now. So we gapped up with the earnings report. We've pulled back, but I would be watching from a more intermediate term perspective. I think 130 to about 152 is a key area to keep an eye on for Spotify. Now, a couple of other bank reports. I do want to show you the banking index, but let's take a look at a couple of these earnings reports first. So let's jump in with what's the next one? Let's do QSR. This was restaurant brands. And the main reason I wanted to focus on this one, it's in a good group. So I'm going to pull up this relative chart for QSR. You can see the breakout occurred at about between 64, 65. That's where we had the top here. Got close to 64 in January, close to 64 in July. So this is an area on the pullback that we want to watch to see if we can hold. I like the candle that's forming right here on the 50-day moving average on heavy volume. so far. And here's the restaurant and bars group, which has been performing very well and has started to strengthen on a relative basis. I see a bullish pattern on this relative chart potentially forming here on the restaurants. We've been consolidating for the first 4 months of the year, but starting to pick up a little bit. I think this is a group that could go higher. Now, there are some other names in the group I think that look better than QSR, but I think the stock here holding the 50-day moving average is very interesting, something to maybe keep an eye on as we go forward. Lowe's Corp, the different Lowe's Corp, not the home improvement company, but you can see this Lowe's Corp actually making a nice breakout above recent highs. They did come in and beat their estimates easily on the bottom line, $1.27 versus 96. You can see the group recently making a breakout to the upside. Now the only question is, can we begin to trend higher on a relative basis with Lowe's versus its peers? That's the one thing that's lacking, because the overall strength in the group has been pretty good. So can we hold this breakout? Now, when I trade a stock that is in an improving group, but the stock itself is struggling, I've talked about this a lot, but see how this rising 20-day moving average is holding? Any kind of a short-term breakdown in a stock that's lagging is a warning sign to me. I'm much quicker on the trigger on the sell side with a company that's not performing well on a relative basis. So that's what I would consider with Lowe's here. I think if we break that 20-day moving average on a closing basis to the downside, given the overall relative weakness that this stock has been showing for the last year, that would be enough to get me out of the stock. So I want to make sure this uptrend stays in play. The last one I was going to bring up is ON, and then we'll talk about the banks for a second. But here is ON Semiconductor, and the group overall has been great. I know Intel was a disappointment last week. Xilinx, I think, also taking a big hit to the downside after being one of the best semiconductors for several months. But the overall group, many of the stocks in the space still remain strong. And yes, we did pull back on the semis, almost a couple hundred points, but look at the move we made off of that December bottom. You're going to have profit taking from time to time, and we've seen that. So I'm not overly concerned about this pullback. I believe semis will continue to lead over the next few months. Now, over the past 3 months has been off on a relative basis. This stock has been moving lower relative to its peers, and you can see today it had a breakout and failed. So I am just going to be looking for sideways consolidation here. 23 and a half to the upside, maybe 20 to the downside. I like the overall pattern, but a false breakout in a stock that is underperforming on a relative basis, I'm not interested in. I'd either have to wait for this key support level down around 20, or I need to see a heavy volume breakout above this key resistance level. Until then, I'd probably just be on hold with ON. All right, let's pull up the bank index, the banking index, because this is a group that is making a very nice breakout. I'm going to stretch this out to a year. And you can see off of the downtrend, look at all these reaction highs to 460. We saw it in October, November, December. We got up into the 450s when we began to strengthen in March, went down one more time, and now here we are getting back up to the 460 level, trying to make a breakout. Now, if we reverse today and we fall back down below 460 and leave a tail well above 460, that could signal a short-term top. But if we do make this breakout, I think this is a good sign. And when you look at some of the larger banks like JP Morgan trying to make this breakout above the September high, Bank of America doing the same thing, trying to get through those August, September highs, clearing. I mean, we're at the highest level we've now seen in about 6 or 7 months on Bank of America. And then finally, we've got Citigroup. You can see Citigroup making a push to a multi-month high as well, with a little bit of overhead resistance around 74. But there's no question in the short term, banks trying to make a breakout, they're strengthening. A rising 10-year Treasury yield would certainly add some wind to their back. So keep an eye on that 10-year Treasury yield and see if we do get a little bit of upside there. All right, I just looked at the banks. I know Greg Schnell's got a cannabis update for everybody. Greg, what do you got for everyone today?
I have a whole bunch of data. It's better if I keep my microphone on. I just turned it off so that I didn't breathe into the mic while Tom was talking. So one of the things that have started to move is some of the cannabis stocks, and I've just put up a few of them here to briefly run through them with you. But I think the most important thing is that the group was making, a double top here. And so one of the concerns I had was how was it going to respond to this kind of overall topping structure? And the second concern I had was that momentum was getting lower and lower as it went here. Now, one of the things that's changed in the last couple of weeks, and not every chart has changed yet, which is the reason for the update, is that as some of these stocks start to break out, it starts to turn the whole group higher. And so the new ETF for tracking the marijuana stocks, I got the wrong one there, is HMMJ in Canada, and there's one in the US as well now. What did I typed it wrong, sorry. Just hmmj.to. And what you see here is this is starting to turn back up the scooter ranking. So this is against Canadian stocks, but starting to turn back into this overbought area. And the relative strength is starting to break out again on these marijuana names. And notice the PPO just starting to turn up. So I like and the ETF is kind of the average of the group. So there's a lot of strong stocks in here that I think are worthy of talking about. So here's Kronos. And this stock, you can see, broke out above previous highs, shot back up, and if we just did a horizontal line around $14, that'll give you an idea, kind of the reason to look at this stock specifically, or these stocks specifically. But you can see breaking out in here, this is kind of a support level for it, and you've got your PPO just turning higher again, holding the 200-day nicely. So everything's looking good on these stocks. And again, in February, I was a little bit more bearish about them because they were making these spike highs, and then they did a retest and pulled back. I think what's nice to see on these is that they're actually holding nicely. They didn't start to plummet. Like here, back in here, it got really choppy. October 17th was Weed Wednesday in Canada when marijuana was legalized, and all of the stocks immediately fell away. And I was a little bit worried that we might have that same setup happening here, but they gently pulled back. So I think there's still lots of interest in these names, and they look pretty good. So here's GW Pharmaceuticals, and you can see, what does it look like? It looks like it wants to try and break out through to fresh highs here, and you can just see it's been basing in this area for a while, but push here would be pretty nice. Full stochastic turning up on a weekly chart, that would be pretty valuable. Hexo's on the move. This chart's literally starting to push to higher ground here. So if you just picked whatever 7.25 for a horizontal line or something like that, just getting through all of these levels here, this is a pretty nice breakout that we're starting to see, and this is just a good example of what's starting to show up. Organogram Holdings, this one is listing on the NASDAQ this week. So this is still its Canadian ticker, but it'll be coming to the NASDAQ. And what you see here is momentum is just pulling back to the Tom Bowley reset and starting to bounce off the zero line. And these stocks are literally flying today. So Hexo, I think, was up 8%. This one's up 7%. E Plus is another name that looks pretty good in the space. And you can see it's starting to try and break out to the upside here. So, the nice little push there would help. And Pyxis, I think is the way to say this, had been in a relatively aggressive down move here from 32 to 17. That's about a half price deal, and it's starting to turn back up again. And I think, again, there's a lot of congestion in this area, but all of a sudden in the last week, these things have started to turn up, change momentum, and they seem to want to climb higher. So, and just before I wrap up with the final chart here, I'll pass it back to Tom. But this Trustco, this isn't the one I was hoping for, sorry, TRST. I'll just show you on the Canadian side here. There's some more of them that, what did I do? My apologies. Anyway, maybe I'll flip it back to Tom and I'll pick it up in a bit here.
Yeah, actually what I want you to do just for a second there, Greg, is go back to that Kronos chart for a second.
Yes.
Because this stock, I mean, it was consolidating really nicely back at the end of 2018, where it was really struggling to get through that 14 level. And then it finally did, and it took off. And it reminded, when you showed the Hexo, HEXO,
yes,
that chart up, because that one is just now making the move.
Just starting to get going, yeah.
Exactly. See all those tops coming across at about $7?
Yeah, really nice. And the other thing you can see on these when you go to the weekly, this is just this is how an uptrend looks, and they're just starting to break through this 9 months of resistance. I think they look great.
Yeah, and the volume there on Hexo, I think, also should be pointed out. I mean, there's some serious buying taking place there.
Yeah, somebody's showing up for work.
Yep. All right, so we are going to move into our Monday setups, but before we get into this week's picks, let's start with last week's picks, because I got to tell you, Aaron had a really good one last week, and that was, we'll get that slide up here for you, MODN. And MODN was picked by Aaron at 1784. It's at 1857 right now, which is probably up about 4.5% or so. Really nice pick there for her. E-Trade, ETFC was my pick. It did pull back to that gap support, even to the 20-day moving average that I talked about last week, but it has started to rally, and especially with the 10-year Treasury yield being up today, talking about some of the financials having a really nice day. E-Trade was following suit earlier. So let me start by pulling up these two charts for you so we can take a look. First, it is, well, I'll start with ETFC first. Well, no, I got the MODN. Let's go ahead and do the MODN. So I know Erin, she's not with us today. She'll be back tomorrow, by the way. But she did like the breakout, and you can see this is the PPO, but I remember her PMO also turning up and crossing over. That was the reason she liked it. It has continued moving higher. It's been a really nice performer here over the last week, so I'm sure she'd be happy about this one. And ETFC, E-Trade, was my pick, and here was the gap up. I like this breakout above the prior highs, and I talked about maybe it filling gap support or even the rising 20. It went down and hit both, but it is coming back up today, and up 1 2/3 today, so having a pretty good day with the financials strengthening. So E-Trade I still like. I don't see anything on this chart. In fact, I think that's a very bullish test of its rising 20-day. That's been holding throughout April. I expect we'll see higher prices. All right, so we're going to go into this week's picks. And Greg, I understand you have maybe a couple more of those cannabis stocks that you saved for your Monday setups.
You bet I do. So obviously, covering off cannabis and not covering Canopy Growth is a bit odd. This company already has a market cap of $23 billion. Just so these, we're not talking small caps anymore. These things have clearly moved into the limelight and are really starting to look nice. Now, a couple of things just to show you on a weekly chart, and then we'll go back to the daily. But this momentum has come down, retested zero, the bully favorite, and then pulled back up and is starting to make a higher low, and it looks like it wants to take off. And look at the accelerating volume in the last couple of weeks. So when the scale compresses like this on the right-hand side of the chart, this is exactly what you want to look for when you're looking for fast-moving stocks. You want to see this compression on the scale. If it goes up in quarter cents, even if the stock started to move, it wouldn't make a difference. You want stuff like this that's really going to start to throw off some heat. So if we go look at the daily chart on this, any way we shape out this chart, I think you'd be pretty impressed. Obviously, the momentum is just turning up on a daily. I particularly like a trend line across like this. And even if you went horizontal, you'd probably set it up, somewhat in this range. And it's clear to me that we're starting to just get cooking here again. So this chart looks really, really strong. Lots of things to like about it. And on that, I've got another one for you that was a relative high flyer. And the big thing to remember on these Canopy Growth or on these marijuana stocks is they move a lot both ways. And this one is Tilray. And again, it IPO'd $20 and went to 300 like a moonshot. And obviously this was all in 1 week. And even on the daily chart, if we go out to the daily, I think the important thing to watch for here was it moved, $150 in 1 day. And then for some reason, it might have been what we called an exhaustion move. It literally rolled over and basically kept falling from there. So when you get these parabolic spikes, it's a good time to try and figure out a way to take profits. And obviously with a $100 move in 1 day, you might be at an exhaustion move. So anyway, hopefully nobody bought the top tick on that one. But I think more importantly here is this Tilray had a lot of attention to it, and now it's all died down. So I don't want to throw the stock out with the bathwater here, just because it's at the bottom of its of its current trend. It's still a double from its IPO. So this is an interesting area in here around $50, and I think taking a look at this stock for potential to start to turn up and move higher, and you can put a stop very close on it. I think for for investing in the space, you really have to look across and see which stocks are performing well. The only reason I brought this one up specifically in Monday setups is because this is not exactly a waterfall move down. I know it moved down a lot, but what the important thing I think to remember is as it comes down here, somebody's buying the other side of this, and it's just starting to get the turn on the PPO. So if you're not a fan of it, I don't mind. There's no intent here. I think what's important is just zooming in on the last few days. Sorry, I got my screen all zoomed in. Just moving in on the last few days here, you can just see if you'd put a little ribbon across the top of this is just a Keltner channel, and this is a 60-minute chart. And you could just see this is starting to try and break through these moving averages that it's been stalled at for a long time. So if I was to pick something that I think has huge volatility and could really pop to the upside, it's a chart like this. And again, you get to set your stop very, very close, which is really nice. And on the other side, going back to Canopy Growth, if we just did the same thing on this stock, I mean, clearly it's not pausing here. It's up and away. So you're looking for a little bit of a pullback in the uptrend to start getting on board. But this stock just started to move early last week and is really taking off to the upside. So I like the space. Again, Organogram is another name that's listing on the US that should add volume and price to it. Hexo was breaking out to new highs. That Kronos chart was setting up nicely for reversals. So there's a lot of good things there. So at this point, Tom, I think I'll hand it back to you. The one point I would say is if you just slow down the moving averages, and in this case, I've taken a MACD of 200 over 600 on a 60-minute chart. So again, just taking some long time frames to just say, look, what's the big trend here? And you can see that it was negative for all of February and March, and now all of a sudden it's starting to turn positive. So now what you're looking for is a pullback in the uptrend, trying to figure out a place to buy.
Yeah, and I would add too on the CGC. I mean, for those maybe who are a little bit concerned about all the volatility, keep in mind it was Constellation Brands, right, that invested in Canopy Growth, CGC.
Yeah, they bought a big chunk, and again, there's two things that are coming out this year. It's the drinks are a big thing, and the edibles. So in Canada, the edibles are going to be legalized in October again. So that's an important thing, but the idea here is what they're learning in Canada is obviously going to roll to the U.S. As the U.S. broadens out its stuff. So I think the big opportunity here is to just be aware of what's setting up, and these charts are just starting to make turns on the weekly PPO. That's so sweet, and if you're trying to find a nice entry, that's the reason. It's the edibles and the drinks that'll start to come out with this, and I think that'll be a big mover.
All right. Well, if they put it in tea, we can wait for our pot to boil, correct?
Oh, look at you.
I'm sorry. I couldn't help it.
Oh, that's too fun. It's all good.
All right. I'm going to move on that note. Let's take a look at Snap. This was my pick. I put it in my blog article this morning. It's up 3% today. I've done this before where I look at it and I say, okay, it's already up 3%. I don't want to use it for my Monday setup now, but a lot of times they keep running. So I'm just going to stick with it. I'm going with it. Snap right now is 11.24. So that will be the price for the setup for this week. And by the way, we do have a poll running, which includes Greg's two setups of mine, Snap and EVRI, which I'll go into in just a minute. And then our producers also put in two stocks. So you can go in and vote on your favorite. And at the end of the show, we'll see what you all came up with before we wrap up. Okay, so there's Snap. I just like the fact, first of all, this is a stock that posted great results back in February, much better than expected. I think it's a character change on the chart. I think we've gone from a downtrending chart to an uptrending chart. If I pull it up on a relative chart, you will see that the internet group obviously has been starting to regain its strength. And Snap, relative to the internet group, has been very strong. So you can see we've got a leader in the internet that we are now at a probably 8-month high. in terms of relative strength, internet versus the S&P 500. And you've got one of the stronger stocks in 2019 in that internet space. So I like it. I think if you go back down much below these recent lows, I would say, well, 10 to 10.5 is a key area of support. You've got gap support at 10. That's where we gapped up from back in March. And since gapping up in March, we haven't had a low below 1050 on a closing basis. So that's why I'm looking at that area as major support. I would look for at least a short-term pop back up here to 1250. Even from the current level, we're talking about more than 10%, which is a nice return, especially if it were to happen quickly. So I like Snap. I'm going to go with it. EVRI. This is another one that I like. This is in the financial administration area. And if I go down here, you will see this has been one of the great areas of the market for a long time. EVRI, look at the volume coming in March when they reported their earnings. They broke out. They pulled back. I think we have a classic cup and a handle going back to the 20-day moving average. Stock up 1.5% today. I think a breakout would be extremely bullish here. And like I said, volume trends have turned up. I think there's accumulation taking place in the stock, and we're in a very strong part of the market. So this was my second setup and is included in the poll. A couple of these others you've probably seen before, because I think VCYT I used last week. It hasn't really gone anywhere, but I still like it. So I thought I'd include it as part of my setups again for this week. I think 22 to 23 is a great area for the stock. It was down as low as 22.85 today. I think on Friday it went even a little bit lower than that, but it's been bouncing off that 50-day. Also notice we broke out last time above $22 on some nice volume. So I think pulling back to that area, broken resistance becomes support. I think this is classic technical setup. TA 101, I look for the stock to go back up and challenge that 26 level. If there's one downside to the stock, it's that biotechs still are struggling. They broke down below that 1950 area that had been holding throughout 2019, but we are coming back up to that area. It would certainly help the stock if the group were to break out, because this stock is not lacking anything in terms of relative strength to the biotech group. We have been on fire on a relative basis, so it's really just the fact that the overall group is not performing well. If we were start to see money rotate into biotechs, I think Veracyte would be a really big beneficiary of that. So something to watch for there. Sienna. You know, at first last week, I was talking about this one, and I was really disappointed to see it close back below its 20-day moving average on Friday, but I'm going to shorten this chart because there is one thing that I liked on the pattern, and I ended up holding through the 20-day breakdown because that's where I was going to set my stop. And what I wanted to point out here was on this pullback, first of all, there is a neckline. And had I been paying a little bit better attention last week, that shooting star on Wednesday of last week with the false breakout should have alerted me to a right shoulder, inverse right shoulder setting up at $38, just like the left shoulder. So we had the earnings. The stock came down, set up an inverse left shoulder, moved back up, came down to a lower low, double bottom for the head, went back up to the right side of the neckline. I think is now put in a right shoulder. So I've actually got a stop in on a close below 38. I think we could see Sienna roll from here. We'll see. This one's been volatile, no doubt. Let's take a look at the next one, which is YY. That's probably what I'll be asking myself if I buy it. But let's take a look at YY. This is in the software area. I think we're just settling back to the 50-day moving average, which is pretty close to key support. This is in the software space, which has been so strong. This was a stock that actually set a relative high versus software at the beginning of April on this move. So while it's consolidated, it's lost some relative strength, but that is starting to turn back to the upside. A breakout above 88 to 89 on YY would be very bullish. YEXT. This is a stock actually that I provided in my Friday Trading Places blog article and also in my ChartWatchers article over the weekend. Anybody who wanted a list of 5 stocks, 2 were semiconductors and others were just some trades maybe to key in on, could write to me at tomb@stockcharts.com and I would send you those 5 charts. So again, if you want those, if you didn't respond or you didn't see it, send me an email, tomb@stockcharts.com, and just ask me for the 5 stocks. I'll send you a link. but YEXT was one of them. And you can see the stock up 4% today. I think this pullback back down to the area of the breakout. Look at the volume pickup on this breakout. It's been, I could call it a momentum sleeper, under the radar, something like that. It's just kind of been drifting lower, but it was over $23 in March. And look at its relative strength versus the internet back at that point in time. And then we consolidated. Look at the volume. Almost no volume, sideways consolidating. I think we're going to break out back to the upside. So YEXT, I think, looks pretty good. I'm going to give you one more, and then we're going to call it a day for the Monday setups. But let's take a look at Adobe, ADBE. Actually not really liking this candle right now, but it too is in the software space, starting to strengthen. I'm going to go a little bit further back. I want to go a year here and take a look at Adobe on this chart. But look at these tops coming in right at about 275. Last week we broke out. We gapped up even further. Huge volume today. I think if we pull back and get anywhere close to that breakout near 275, you're going to be almost right on the 20-day, which has been very strong. So this is more of a potential setup. If I get a pullback on Adobe, really going to like it around that 275 level, something to look at. So those are our Monday setups for this week. Let's do a quick summary, and then we'll get into earnings spotlight. So Greg is going with Canopy Growth, 5174. I think that one, too, is starting to pick back up again. That does look like a pretty good play. Tilray, another one that Greg gave. And, of course, all of the marijuana stocks that Greg went over. I took a look at Snap. That's my pick for this week. And then several others you can see that I went over on your screen as well. Okay, let's move on. So I want to go into the earnings spotlight. And, again, what I did here for this week, and I try to take a little different angle each week when I go into earnings spotlight. But this week I wanted to go back and look at some of the stocks on my strong earnings chart list that for the most part had very, very positive reaction to their last earnings report. And technically, I think look interesting, not always bullish. So we'll take a look at some, maybe some bullish ones, also some that maybe didn't work out so well, because you always have to, at least when you're trading, think that a trade could go against you. I wouldn't go in with so much confidence that I pay no attention to it and don't think about a stop. You always want to make sure you have a stop. But Acacia Communications is the first one. Look back to February. Look at this move. Look at the volume. When you go back, nearly 4 million shares traded. And over the last year, we have not seen that very often on this stock. But we do continue to set higher highs and higher lows. I love that hollow candle. When you think about gaps and you think about news and a stock gapping higher, when there's volume coming in and everybody wants to jump in, market makers are on the other side. They provide liquidity for the market. So when you got a gap up and you have market makers on the other side of the trade shorting, the path of least resistance is generally to the downside, and it's why we normally see gaps fill. Well, if the market makers, who have a lot of influence on the direction of prices, are in on the short side and a stock continues moving up after the gap up, that tells me, and market makers don't make money on every trade, by the way. They'll get stopped out just like you and me. So when you get a gap up like this on heavy volume and you keep going higher, that's a sign that there's a lot of demand for the stock. And so ACIA did pause and came back, actually got a nice little 20-day test before moving higher. So you can get these stocks on pullbacks. But I know a lot of times when you see a gap up on really heavy volume like this, you think, oh, well, the run's over. I can't get in. Many times there's a lot more run to the upside. And I'm going to go over some more of these that provide just that for you. But ACIA, I also want to point out here that it's in the telecom equipment group, which on a relative basis has been a great area of the market, outperforming the benchmark S&P 500. And you can see ACIA has been a great performer relative to this area of the market. So when I get pullbacks to key support levels on a stock that is one of the best stocks within its group, and its group is one of the best groups relative to the S&P, these are the types of stocks I really enjoy trading. I have more confidence trading them. I might give them a little bit more room because it could just be a head fake to the downside before we get a big push back up. But just wanted to point out ACIA, I think, looks really good. Here are some others. APPN, Appian Corp. Look at the volume coming in early February on this push to the upside. Now, here we came down, we held the 20, we bounced a little bit, went back down. So it didn't work out so great in the short term. And if I had traded it off the 20-day, I would have been stopped out. But a lot of times when I draw my support lines, where the buying begins on all that volume, a lot of times represents great support if a stock does continue moving down. So I'm going to draw that line here and just show you. On earnings, we started trading at about the 31.5 level, went all the way up. When we did break down, even if I got stopped out, I would have had this on my radar for this 31.5 level. And you can see we tested it multiple times, it held, and now look at what APPN is doing. Rallying back to the upside. It's part of software, which has been very strong. This was a great relative performer for a while versus software. And then when it struggled here and pulled back to support, it lost its relative strength, but it's now starting to turn up. So what would I look for? Well, now I'm starting to show relative strength and I'm back up above that 20-day. I would not be happy if I lost the 20-day on this stock. Next up, CATM. This is Cardtronics, I believe. Yeah, Cardtronics. This is another one in the financial administration space. So I talked about EVRI as part of my setups. Well, this is a stock that is in that space. So I'm watching it closely. It's been more or less just going along for the ride in the group. So it's not one of the best stocks within the group, but it doesn't have to be because the group has been outperforming the S&P 500. So to the extent this stock goes along for the ride, it's okay. But off of the February relative low, we have started to uptrend. And the volume did come in back in February. Notice we pulled back, held that area of support, tested the 50-day, broke out. I think we're just sideways consolidating here. I think this is one that to me looks good. It's in a good space. And a breakout, it struggled at 36. I think if you just get a push through 36, we could see the buyers begin to rumble back in. OLED, Universal Display. Look at this candle. And I'm sure probably you see this move and the stock's, 118. The next day it's at 145. And you say, well, I can't jump in now. How much higher can it go? Well, in this case, it went up another 20% in the next 2 months. Not bad. Now it is pulling back and it is starting to show a little bit of relative weakness, which is not a bad thing because it has been a great outperformer for a while. But this is one I kind of got on my radar. You can see the last price low is around 150. Got the 50-day moving average at 155. If this stock gets back down around 150, 155 into that zone, I may start thinking about it because I know the recent high at 175. I'm in a pretty good area of the market. Not the best area, but not bad. It's been rising off of the relative low in October. And I've got one of the better stocks within the space. So I think 150, 155 would be great entry into OLED. TTC. Toro Company. Look at the move up with earnings back in February. Another one was big candles. Look where we pulled back. We hit the 20-day and then took off. From that 20-day test at 66, within about 5 or 6 weeks, we were up about almost $9 on the stock, which is maybe 13, 14%. Pretty good move. So if you're patient, wait on these stocks, you can find some great opportunities. Now, you got to keep your stop in place. So if you're getting in on the 20-day, if that's your entire entry, you put 100% of your position in there, I would keep a fairly tight stop below. Another strategy, though, if you look back, we had a nice breakout above about 63.5. So if I got in on the 20-day at 66, I might maybe think about a second entry around 64 and then keep my closing stop below that breakout level. So maybe I only would have had half of a position going up, but half's better than none. And so that's a little bit more of a conservative way to try to work your way into a position. But they don't all work. And I'm going to show you a couple here in a minute that didn't. Just when you think you got a great trade, you still want to keep your stop in play. Here's Trade Desk. So here was the beautiful move up, heavy volume, came back, hit the 20-day. Look at this pullback here. We didn't go all the way to gap, top of gap support. We just went back to that prior low. So that becomes a pretty critical low. That's where the buyers come back in. So if there's buyers here second week of March at 180, why would we not want to expect that maybe the buyers are going to come back in again at 180? That's exactly what they did here on Trade Desk. Stock went back up near its high. Look at it breaking out again. So software breaking out. Trade desk relative to software continues to be strong. This is one of the best stocks in the market, in my opinion. Until we start to see a breakdown of some sort, this is a stock that I would not look at and say, wow, it's gone up too much, I don't want to be in it. I would instead look at it and say, there's a reason why there's a lot of money rotating into this stock, and it's in one of the strongest areas. This is the type of stock I want to be in. And when I get a pullback, I need to trust what the chart is telling me, which is to become part of this type of a stock. ETSY, Etsy. I am kicking myself over not owning this one. I literally looked at this right when it got down to the tail. Again, here's your gap up, heavy volume. We went back down, had an intraday low. That's where the buyers come back in. And look at that move right back up near the high very quickly. Well, I had a second chance and I didn't get in. So a little over a week ago, I was looking at it, and I believe I even included it as one of my setups for my Trading Places blog. It wasn't the main setup, but I think it was one of the setups, or maybe it was just one I talked about last week. But I didn't get in, and you can see ETSY having a huge, huge week last week, up probably about 10% off of that low on April 22nd, which was last Monday. All right, Melly. This is one I like a lot too. Mercado Libre. Here's another one. Big breakout. Look at this sideways consolidation. If I could add another thing that I like is sideways consolidation, a basing pattern before you get this push to the upside. Because I think at this point, you've had a lot of folks selling. So we're going through, I think, what would be called in Wyckofian terms, a reaccumulation period before we get that breakout. We'll have Bruce Fraser on later this week. If I remember, I'll ask him about this one. But that's what this looks like to me. Sideways basing period, reaccumulation phase, breakout. I think we're in another move to the upside. And I think this recent test of the 50-day moving average, not a bad area to think about getting in. PANW, I own this one, full disclosure. I think I really like it. It is struggling at 250. Probably should have put my sell order in, because I do think that is an area. But I look at the trading range 230 to 260. That's my trading range, so I've been holding out. Last time I went up to 250, I ended up riding it back down to 230. Maybe I do it again, but I believe we're going to get a breakout here on Palo Alto Networks. I think we're going to go to 260. But this is in that telecom equipment space that has been so strong. And when you look at the stock, while it's been consolidating, see, you got to be careful about looking at the relative strength and saying, oh my gosh, it's very weak. If it makes a technical breakdown on its chart, like if it broke down below 230 and it's showing this relative weakness, I'm out. But when a stock goes from 160 to 260 in about 3 or 4 months, it's entitled to a little bit of sideways consolidation. So if the group keeps going higher, then you're going to see relative weakness from time to time. I think this is still a stock that looks very, very strong to me. And I suspect after this consolidation period, we're going to break out again to the upside. Okay, they don't all work out so well after gapping up with earnings, though. Look at Splunk. Now, I still like this stock. It had a huge move up, gapped up with earnings, but buy on rumor, sell on news. So when you get a filled candle going the other way, you want to wait and let this stock settle down. And so here it came all the way down, set its low at 120. That's where buyers came back in, moved back up to 132, nice little 10% pop. And then it pulled back again right to a key support level. This is how you manage your risk if you're trading. If you see that prior low, you know you're in the software space. You know you got a stock that just gapped up, provided better than expected earnings per share and revenues. So you got great fundamental results, a nice reaction positively from a technical perspective, established a key support level, and tested it. That is usually a great time to get into a stock. And you can see in a month, stock's up $20, 17% off of that low, continues to strengthen. So, but my point here is, great report, it gapped up. You don't know which way it's going to go after it gaps up. So just because it gaps up doesn't mean I would go in it that day, hoping I get one of those big hollow candles. Many times they go in the opposite direction, just something to be thinking about on Splunk. All right, let's do one more stock, and then we'll wrap up here. I'm I'm going to pull up CRI. So CRI, Carter Holdings, here was a gap up. And again, do you see a big hollow candle here? I don't. I see a shooting star, which is a reversing candle. I also see a false breakout above these highs around 100. We had it intraday. We were up to 103, came back down and closed at 99 and change. What happened after that? We came back down, filled the gap support 20-day. That would have been a great entry point because you can keep a very tight stop. If it closes below that, I don't know where it's going to go, but it's not going to be a good sign, I think, if it fails to hold this uptrend. So this one breaks down temporarily, comes down to the 20-day gap support and turns back up to the upside. The group itself, clothing and accessories, has started to regain some strength. It's broken out again on an absolute basis, clearing that March high. And CRI relative to the group has been uptrending over the past few months as well. So this is one that I think is looking pretty good, holding its 20-day moving average. That seems like a great entry point. All right, let's go ahead and pull up a summary of the 10 and 10, or excuse me, the earnings spotlight stocks, and then we'll get into that 10 and 10. But here are the stocks that I just went over. You can see, I don't know, maybe 10 or 11 of them that I featured. And again, these are all off of my strong earnings chart list. So every one of these companies in their last quarter or in their last quarter's earnings, they did beat top line estimates, revenue estimates, and bottom line estimates or earnings per share estimates. So it gives me confidence to trade these stocks because I know fundamentally they're on track. And then I wait for good, solid entry points on their charts. And trust me, the more you look at these charts and the more you look at gaps and you follow, their patterns, they don't always look the same. A lot of these I showed you were different, but you start to get a sense of where the key support levels are, where you should start looking for reversals. And it's made a huge difference in my trading over the years. And I think it can make a big difference in yours as well. All right, let's move into the 10 in 10. And I know we were going to start with Lazard. So let me pull up that one first. And I'll annotate it for everybody. Hopefully you had a chance to take a look at this one. There is the chart, LAZ. I think we got a little bit of overhead resistance to deal with. And so I think there's a little battle going on this stock right now. It's in investment services. So before I start annotating, you look at the investment services. We have bottomed off of that December low. We broke back to a new 2019 high recently. But when you look at the group relative to the S&P, you got to hope that March low was the relative low, that March relative low here. And you're going to start to move higher. If that's the case, a stock like Lazard could turn out to be very, very profitable. The next move, though, to confirm that, we need to see an absolute breakout. I'm a little leery of stocks within groups that are not performing well. And so, yes, in the short term, we're seeing some nice action here, but we've seen this before. We saw this stock move up at the end of January, early February, only to roll back over. We saw it at the end of November. We rolled back over. We saw it in October into November. So these resistance levels, or this resistance level, I think we need to pay pretty close attention to. And just last week, with the heavy volume, we went right up there, and sure enough, sellers were there once again. We needed a confirmed close over 41 with some heavy volume, and we want to see a relative breakout. So that's the other thing that I would draw here, is you want to get a stock that's leading its group. If the group's starting to perform better, let's find one of the stocks that's breaking out against its peers. If we could get through this level, LAZ would then be at about a 6-7 month relative high. And if that coincides with a absolute breakout, then it makes sense to me. Until then, I'm going to be a little skeptical. And so I'm going to hold off and wait for that development. I'm going to pass for now. Greg, you got some others for me?
I do. One of the big improving areas is the insurance area. Some of those stocks are on fire. Anyway, we've got PGR.
Yeah, this is one that certainly has been among the better ones. And I think this was one that we talked about last week where it had gapped up on its earnings, pulled back, hit that support area around 74, and started to turn back to the upside. And I agree. There you can see the insurance here breaking out above these prior absolute tops and look at the relative strength. This is actually one of the areas relative to the S&P 500. This is one of the areas in the financial stocks where we've seen some pretty good action. And so PGR being one of the better stocks in the space, yeah, I like it. And I think pulling back, I think anything down around that 74 level makes sense. I'm going to say 73.5 to 74 right in there. I believe that is a great accumulation area where you can keep a fairly tight stop. If you want to give it a little bit more room, we could drag this line maybe down to here and maybe say buy at 74, buy again at 71 if it gets down there, and then maybe keep a stop below 70 or something. There's different ways to slice this up to give yourself a little bit more room, but I don't think we're going back down here to the 70 or 70.5 area. I believe we're going to hold that 74 level and break out again. So I do like PGR. I think this one looks like a really strong stock within that insurance space. And so, yeah, this is a hold for me.
Next one we've got is bruised and abused in the healthcare space, IBB.
Yeah, the biotechs have not been good. I can just pull this up on a regular chart. The problem here is that we did lose that recent support level. So now we're going to have two levels that we need to negotiate. I would not be in this group if I wasn't in it right now. And to be honest, if I was in it, I would maybe think to minimize my loss here until we get back up above the 20-day. So I'm not giving up a whole lot of room. So if I suffered through that move to the downside, this reaction move back to the upside, I'd think about getting out. Now, the one thing that I think is a positive is that I believe a rising tide lifts all boats. And when you take a look at IBB, it hasn't been a great performing area, and it's going to need to get through that 20-day. But I believe the stock market's going a lot higher. And I think biotechs will at least go along for the ride. I just want to see them start to outperform on a relative basis, and we are definitely not there yet. So mixed bag here for me. I like other areas better. Watch for a breakout above the 20-day. That could be a good signal here on IBB.
Here's a ticker you might have looked at before, AMD.
Yeah, it's in that semi space. I love AMD. They do report this week, I believe. I think it might be later this week or early next, so you want to keep that in mind. But it is holding on to its gap support from back in early April. Here was the gap up on very heavy volume. Each time we get back down close to that 27 level, we bounce. So for now, I think we're in this little short-term trading range between 27 and 30. But I believe there's much more room to the upside on AMD, and I think we're going to break out of this range eventually. Got another?
No. CPG. Crescent Point, CPG.to.
All right. CPG.to. I like it right here. I like this pullback test of the 20-day. I think we got a really nice bottoming reverse head and shoulder pattern that was confirmed. I could draw it or annotate it, but here's your left shoulder. Here's where we establish the left side of the neckline. We go down one more time to the reverse head. Back up, establish the right side of the neckline, and I love the volume coming in on this right side to establish that neckline. Pull back one more time in a right shoulder, lesser volume, and then we get the breakout. I think there are two key areas to watch here on the stock, and that would be the 20-day moving average, which so far we're holding. But if we did fail, I would still be willing to give this stock down to 470, which was that neckline. I believe that is your key support now. So those are the two levels. I think this one looks good. I love that reverse bottoming head and shoulder pattern and the breakout with increasing volume. I think this one looks good.
Hexo.
That's the one that you talked about earlier.
A little bit, yeah.
And let's see, I'm going to agree with you. I tell you what, I think this stock looks really good. I mean, it's volatile, and so strap on your crash helmet if you're going to jump into this one. Those of you with a very low tolerance for risk, I wouldn't even think about this stock. I mean, it's at 828. If this stock were 720 tomorrow, I wouldn't be shocked. But that to me would be a great opportunity to get in because that's where we broke out from. Yeah, what I see here is an uptrend, a little bit of a cup, sideways consolidation for a couple of days, and a breakout. So I think what we're going to see, we've actually made this measurement, maybe $1.20 up to about 830 is that short-term measurement here, and we hit that today. So I think that the stock looks great, but I'd have to see that pull back to the price support level. So I agree. I think stock eventually goes higher, but I don't want to chase because I can guarantee you if I got in here tomorrow, it would be at 720.
We have a small cap AMZN.
Oh, Amazon?
Yeah, just $1 trillion. So
Yeah, just a little guy. It's starting to improve. I'm going to pull this one up on a relative chart. I think Amazon, I said when they reported last week, I was bold. I thought they might gap up 100 points. I just liked the way we were starting to set up. Amazon relative to the broadline retailers was on the verge of a breakout. The group overall had just broken out on a relative basis. So I thought Amazon might really soar last week. Now, we did get a little bit of a gap up, pulled back, and then strengthened. I think we've got an unabated move here to test those all-time highs, though. So I'm bullish Amazon. There's the high that we're going to be looking to get back to 2050. In the meantime, could we pull back? Sure. I think the rising 20-day moving average would be a great entry point. So I'm a fan. I like Amazon.
we need to check out Frosted Flakes, ticker symbol K.
Oh, see whether this thing is Tony the Tiger. Not exactly Tony the Tiger. Trying to get back through $60, which has been an area of resistance. You can look at the relative strength here of Kellogg's within the food products area. Not good. So a couple things that really stand out here that I would annotate. I'm not interested in the stock. First of all, if I believe the stock market's going higher, I want to be in areas of the market that outperform, that are aggressive. I don't want safety and consumer staples. So I will trade very, very few staple stocks when I'm bullish the overall market as I am now. But here was a price breakdown. You can see multiple support tests here. You could even go back, June, where we bounced off of this level. So close to $60 has been a key area, or was a key area of support before we broke down on some pretty hefty volume. And notice the reaction highs have come up here. So at some point we'll get the breakout, because I do think, again, the rising tide lifts all boats. I see Kellogg's going higher. I just don't think it's going to be an outperformer. So I'm not interested in it. I don't know what else to say, but on a relative basis, the fact that the group has been struggling tells me I want to stay out of Kellogg. So I'm going to pass on it.
Perfect. And we have another one that's hot on the news all the time, XLNX.
Yeah, just reported its earnings last week. That with that kind of volume, it could be a character change on the chart. I don't believe it is, because I really like the semis to go higher, and I don't think Xilinx is just going to fall apart. But I do think this is going to lead to a period of consolidation and probably a period of underperformance for a while. So where could we look? Couple of things that I would be looking at short term. The low that was established on Friday, I think, is very important. And of course, the gap. When we gap down, look at the volume, and the selling began from there. Getting back through 127 is going to be a major task for Xilinx. I don't know that we do it anytime soon. But if we could get through and the volume come in, that would be a really bullish development. In the meantime, that's where I would consider my sell. To the downside, right now, buyers came back in at 110. As long as that holds, I'm okay trading that range. If it fails to hold, then I think you've got to go back to the top of gap support. If we lose 110, I think Xilinx could move back to the upper 90s. And that would be the major test to the downside, similar to 127 being the major test to the upside. And I think we got one last one.
I think that's 10, isn't it?
Oh, is it?
I think so.
Oh, maybe I may have missed numbered one. Yeah, that is 10. So I guess I just misnumbered one. Anyhow, those were the 10 stocks that we just took a look at. What do you think of Amazon at this point, Greg?
I like it. I mean, it feels like the safest stock in the retail space to me, and I get it. It's extended and all that, and he's going to spend another $800 million on building out. But he basically started as an internet warehouse. Now all of a sudden he's taking the stores directly to the people in their fulfillment centers, so you get the diversity of shopping online with the local and regional pickup if you want it. When they start to get these drones flying around delivering stuff, you'll order stuff and have it after lunch. So I continue to believe that, whether or not today's the day or tomorrow's the day to buy the stock, but in general, I mean, I just want to own Amazon, and I would think as we head towards, I'll call it June lows or whatever, just some summertime pullback, I would want Amazon all the way to December. Yeah. So
yeah, I would agree with you. I think this is one that continues to go higher. The fact that the broadline retail group as a whole is starting to show some relative strength to the S&P 500, I think just adds a little bit more fuel to the fire for Amazon. So I agree with you. And a number of these days, last few days, 3 of the last 5 last week, you can see we closed on the high with these hollow candles. And look at the volume on these days picking up. I think that's a sign that we're starting to see institutions begin to pick up a little bit here and accumulating Amazon. So I think we go up and we test those highs. And I agree. I think throughout the year, we do go higher on Amazon. All right, let's do a quick market update. Did want to just kind of give you an update here. Dow Jones Industrial Average continues to push a little bit higher. We are currently up 33 points. The S&P now up 7. By the way, if you recall back last year when we set the intraday all-time high on the S&P 500, it was at 2940 point something, 91 maybe. I don't remember exactly. But we are above that now. So there are no more hurdles to clear on the S&P 500. We are in blue sky territory, and that can only be a bullish signal. It's really hard for me to get behind any bear market theories when you've got the stock market setting new all-time highs. NASDAQ also up 21, setting a new high. Russell 2000 clearing so far 1600. I think that's a big psychological level for the Russell 2000. The small caps have been underperforming. If you want another confirming signal for a bull market, it's outperformance by small caps. We're starting to see that over the past week. I'd like to see that continue. 10-year Treasury yield still up 3 basis points. Volatility index continues its move to the downside. Financials, I went over all of this earlier. I thought instead of looking at these charts again, we could simply just move over here, get an update, and check out what is happening on the sector summary. Financials, communication services leading to the upside. Utilities, real estate still moving lower. And within the financial space, this is what I was talking about earlier, the banks. And Greg mentioned insurance. We got full line insurance and life insurance following up the banks to the upside. Financials really having a strong day here. And here I'm just going to pull up the XLY and go back a year, because this is a significant breakout. And I don't know, Greg, what you think about this, but after clearing that 27 level, you can see we had a little bit of maybe a flag or a handle, more of a flag, and then a breakout. But we're getting close now to that September high on the XLF. And my opinion is it would be very bullish if financials join the party and move back to a 52-week high. But what do you think with the financial group?
That's been the big problem, is the financials hadn't been, and normally when the financials are making, lower lows while the S&P is going higher, or even just not following along, you want the banks to be part of the picture. And, I think they're still 10% of the S&P or something. So they're huge. The financial component is huge there. And I think, if the banks are turning up, they get to see everybody's balance sheet. They know what's going on out there. So, if the bank stocks are starting to improve, that's definitely bullish.
Yeah, and I just pulled up this relative chart so everyone could look at it. But you can see this is what Greg was talking about, the relative weakness. It's been over a year since we saw that relative high on the financials. And let's not forget, I know it's a distant memory at this point, but financials were on fire coming out of the end of 2016 through the early part of 2018. You tend to forget about them when you see this kind of relative performance. But what I see here is a group that broke out above a prior relative high. We've tested it, and now we've moved back through that 20-day moving average. This is the relative strength moving back up above that 20-week moving average. And a lot of times we stay there. When we get there, it can be a really bullish period. So I'm liking the financials better. There are already some key areas doing well. We've talked about financial administration. You mentioned the insurance brokers, specialty finance has been on fire. And if we start to see the banks and some of these other insurance areas, life insurance and so forth, jump on board, we could see this become a very, very strong part of the market. And I know the bulls would certainly like that.
Yeah.
Okay, we are going to go into the final segment of the day, and this is a new segment for us. So I'm kind of excited about it, and we're going to feature Greg Schnell in this segment. I think you'll like it. It's called "What's Wrong with This Picture?" And so I'm going to give Greg a number of stocks. He's going to pull these up for you on his charts, and he's going to take a look. The first one, Greg, is Tesla. What the heck is wrong with this picture?
You know, the funny part about Tesla, I've renamed it to Tesla because he seems to keep coming out with more and more reasons for people to think that, a million cars next year that don't have a driver. I thought was a little aggressive for his speech this week. And, unfortunately, the stock has been sliding since going back and testing the all-time high. And I think this right here, this bullet to the top here was, if I'm not mistaken, this was the 420 day when he announced 420. So this 375 continues to be the range. But if you go back and just look at this, and I like to look at things on weeklies, but if there's any reason for the stock to turn here, I will say that support has been broken, so all the sellers are gone. Anybody who was marginally invested, who would have put a stop in place, are sitting right down here at 250. And this break to 230, I think I would watch it for an oversold bounce and watch it come back up. And then at that point, we're going to get a little more clarity on whether or not it's got any strength in it. But I would like some sort of some bigger buy signals. I'd probably give it another week to just kind of solidify here to see if it's going to keep going to the downside. But the one thing I would say is the chart is broken, clearly broken. And now the question is, we want to see the volume pick up on this week's candle, because last week it exploded. And this week we need equal buying volume to show back up and really start to push the stock back. Something like we had in here when it broke down to new 52-week lows, and then all of a sudden the buyers stepped back in. So that's what I'm looking for this week at a Tesla. But the chart is broken, and there's more than enough problems with 14 deaths and cars on fire and not tracking their manufacturing and a whole bunch of issues. Lots of Teslas in parking lots waiting to be sold. So there's a whole bunch of issues around the name, and I love the guy. I love his visionary thinking, but the stock is different than the visionary. So be careful here, and just I would say if it gets a bounce, it's nice.
Yeah, and when you look at the S&P 500, which since the beginning of 2016 has gone up 50%.
Yeah.
We dipped below 1900 back at the beginning of 2016, and now we're above 2900. And you just look at that chart on Tesla going, nowhere really over the last 5 years that you show. And when you look at the scooter, I mean, this is going to date me, but the scooter looks like a seesaw. When I was a kid, you go back and you seesaw back and forth. I mean, you can't own this one for the long term, can you?
No. And I think there's no reason to own it. It looks like every other car stock. They go sideways. If you just pulled up GM and Ford, really, you've made what, from $34 to $40 on over 2 years. You can spend a lot of time doing nothing. And Ford had a nice week last week, but that's a trend. And I think the big issue on these cars is just people aren't buying them as often. They're fixing them up. That's why the auto parts companies are doing better. So,
all right, we'll move on. Second stop, Gold Corp, GG. What the heck?
Gold is at a scary level here. And so I like to look at things on a weekly chart. That's kind of my first go-to. And what you see here is a big downtrend. We're right up against the top of it. If we just snap a line on here, the thing I notice on this chart is if you expect a stock to stop and it doesn't, that's one thing. But where is it rolling over? Pretty much right on trend. And we're sitting here right at the 10-week moving average. It needs to hold this, but look at momentum. If momentum is going to roll over at zero again, you can see here it was a $14 stock down to $8. That's a 50% off sale. And we'll see if we get another 50% off. But unfortunately, if deflation is going to set in, don't expect commodities to rally. And I think that's what gold is trying to tell us here, because the rest of the world is flat growth. So, the big issue for me is I think you got to stay away from these gold stocks until, you have to stay away from these gold stocks until they they come around. But this is right up against horizontal resistance at 12. It's a perfect setup for going lower.
Yeah, and actually, maybe a better stock to look at here, Greg, would have been Newmont Mining, NEM, because they did announce an acquisition of Gold Corp just recently.
Yeah, and none of these are performing, but you would think, if mergers and acquisitions are going to start to take it over, and Barrick took over Rand Gold earlier in the year. So you see this uptrend here. It's now breaking, but they're all doing it, and that's the real problem. And even good names like Kirkland Lake, really nice chart, looking good, very strong. It really needs to kind of get going here. We've got to roll over in momentum, and if there's anything to buy, it's a breakout on this nice strong stock. So while gold has done nothing, this stock's been on fire. This would be a place I'd look, but all of those other big names that we're used to talking about, avoid.
Yeah, no doubt. All right, let's move on to the truckers. Got a name for you, C.H. Robinson Worldwide, CHRW. This has been one of the worst performing areas of trucking, and trucking has not exactly been doing very well. So what's wrong with this picture?
Well, and I worked for Shell for 10 years, and a big part of my career was in the trucking side of it. And then I went on and worked at a company called Thermo King, which is the fridges on the front. So C.H. Robinson Worldwide was a big name for us, and we spent a lot of time talking about it. But these truckers are usually leading market indicators, and so really do not want to see this 75 level tested on this chart. If this starts to come in, we're failing at the 40-week moving average. That's just not good. JB Hunt came out with a lousy report last week. So all of these to me just look like places to avoid. And the reason that I'd want to avoid them the most is if we're not seeing a pickup in freight that's going to drive these charts higher, it could end up being a clue for us that things are starting to change in the market now. Trucking and software, the two are not highly correlated. So the software can keep going, but these truckers on basic raw goods, look at this new relative strength low, near 2-year lows here. This is clearly a warning shot across the chart. And I would just say, don't let these truckers get too far away if you're in basic raw materials or oil and gas, because truckers haul the stuff right to the final mile, and that would be a clue.
All right, we're going to move on to banking. How about Wells Fargo? I mean, I talked earlier about JP Morgan, Bank of America, Citigroup, all doing well, banks moving to a high. Wells Fargo, and especially if you pull this one up, you've got that relative line versus the S&P 500. I mean, It has just been
this is a 5-year death. Yeah. So
what's going on?
And for an institutional investor, they're trying to outperform the S&P. So buying something underperforming the S&P usually isn't a get-rich-quick scheme. And the bigger thing you end up having is less clients. So if we put in a line, just a horizontal line here at 48, and again, let somebody else form the bottom and buy the bottom. Our job is to buy what's moving up, not down. And this 48 level is trying to get broken here. I will say that there's some support from a PPO perspective of a 1.5-year decline. And if it was to start to break out, this would be the place. And you could set your stop nice and tight. If banks were going to light up, perhaps this one could finally get going. And this is making a higher low. So there's a lot of things that are nice about the chart. The real question is, if you had a choice of buying this one or buying JP Morgan on a fresh new high, I think I'd take JP Morgan. So,
all right. Okay, let's take a look at, let's move to energy. I mean, my gosh, we could probably ask this question on just about anything, but how about Halliburton? HAL, what's wrong with Halliburton's picture?
And I think the big issue here, so there's a lot of talk about shale and the whole Occidental, Anadarko, Chevron acquisition going on here. And the issue is shale provides a lot of growth. A lot of people think it provides a lot of growth, but it really needs a Fibonacci spiral on your drilling. And what happens is that the shale, if you can imagine, is a bit like coal. And so you're trying to get the oil out of the shale. And so you have to frack a lot. You have to crack the ground to get the oil to run out. And the issue that we have is both ExxonMobil and Shell said, we can't drill fast enough to keep ahead of the curve. So in other words, you drill one well, then you need to drill two wells to keep up with the decline rates on the first one. Then you need to drill three, then you need to drill five, then you need to drill 8, 13. You need this crazy ratio of growth in the number of wells being drilled just to hold your production levels, because the decline rates are really quick on these wells. They kind of turn on, you get your money back, but they literally stop producing almost right away. So shale isn't the fabulous place that a lot of people would like to talk about it as an area for growth. Basically, they have to drill like crazy, and as long as they are, the chart will go up. But until the moment they stop, the chart will literally fall apart with quick declining production. So really difficult for these Halliburton companies. They're just not getting the orders to start getting going. And we can take a whole bunch of different looks across the industry, but Halliburton and those companies need to find somebody who really wants to spend a lot of money on drilling and fracking. And at this point, that's not showing up. We're near 5-year lows. So.
All right, we're going to stick with energy. Let's go with ConocoPhillips, COP. This is a stock that is near its 2019 price low, and it's pretty darn close to its 1-year relative low to its peers, and obviously an awful performer relative to the S&P 500. So what's wrong with this picture?
The problem I have on this one, let's just change the trend here and draw the chart line, and I might draw it something like this. You've got 1 week here that sticks below that 3-year trend line, but this is clearly not bullish to start seeing this roll over. S&P's making higher highs, making new all-time highs, and what are we doing? We're falling below the 10-week and the 40-week. So this is not a straight exploration and production. They got a lot of retail, and this is still not breaking out. So I would be very, very cautious with these big names starting to crack. Look at where the PPO is rolling over, just below zero. Look at what happened back in 2015. It also marked the market top. So it rolled over with the market top. But my main point here would be, when you have negative momentum on a weekly chart, avoid. Yeah, really a bad scenario.
Yeah, definitely. All right, we're going to kind of move a little bit around here. Why don't we go with home improvement?
Okay.
HD, I mean, it's had a decent year this year, but on a relative basis, it's maybe struggled a little bit against some of the other home improvement stocks, and it's kind of middle of the road versus the S&P 500. But anything wrong with the Home Depot picture?
The only thing I would look at this chart and say is, you've got this huge triple top here, and this thing is just pausing, nothing broken on the chart. But the one thing I would say is the scooter this time isn't getting back into overbought, which on most of the rallies, we want it to actually become a top performer before people kind of pause with it. And so it's a bit of this declining trend in relative strength. So the scooter is like a sports ranking. So it puts the price movement compared to its peers and just say which one's got a faster price move. Well, what we're looking at here is this isn't getting to the overbought, and we also hit new 2-year lows in relative strength, or 3-year lows, maybe even 4-year lows in relative strength recently. So this is a concerning area that we're starting to dip down, and it's losing strength right as it's making this triple top. So while I don't hate the stock here, if I owned it, I would definitely make sure I had some sort of an option plan to give me some protection if it wanted to move down at all, to make sure I hold the gains I've got. Because you do have lower highs coming in on these PPOs, and the last one was below zero. So one of my findings on the PPO is when they go below zero, there's potential for the next high to be a final high, and that would be a concern I have right here. So if we don't get through this 212 level or 210 level, I would be very concerned, and I definitely wouldn't let it take out the 50-day or 10-week moving average with me on board without protection. I would either have an option to protect my position, or I'd try to take profits now.
All right. We're going to move on to materials. CF Industries Holdings, ticker symbol CF. The stock hit 46 right out of the gate in January, and here we are 3.5 months later, 45.13. What's wrong with this picture?
This 48 level we put on there for Halliburton, and it's funny how it's matching up on a couple of the charts. But the one thing I will say about this, you're stuck under the 40-week moving average again on these materials and specialty chemicals. And I think the issue here, again, the S&P has made higher highs in this time, and we're we're either base building or we're about to just kind of grind sideways before we fall lower. And when that happens, when you don't get follow through from these material industries, so, again, below zero, if you just rally up and then fall down here, this is a pretty important place to be aware of. When momentum gets so weak that people, that the institutions aren't stepping in to buy the stock, there's a reason, and you just kind of need to take that clue. And I think this PPO negative trying to turn up is important, but literally if it doesn't get through this 45 level and a little bit higher up here around this 50 level, this was support for the previous high, then it became resistance on this high. So if you can't get through this next little level here, this is quite concerning, and I'd be scared to own it.
All right, we're going to do one more and probably got about, maybe 45 seconds on this one. But let's move to apparel retailers and Nordstrom, JWN. I'll tell you what, there are not too many stocks out there in consumer discretionary, much weaker than Nordstrom's has been since November. Was $66. Now it's down near 40. What's wrong with Nordstrom's?
And, the problem is they have a buyout offer at $50 and they didn't take it.
Yeah, I don't remember. Could have been.
Yeah, that's looking pretty concerning. I think there was a private. They were going to take it private. The parents or the main family was going to take it private at 50. I think that would have been a nice bet. Anyway, the problem here, you have the PPO rolling over again below zero, and they do have that same opportunity Amazon has, except they have such a limited number of selections because they haven't opened up their retail to 100,000 suppliers. And the issue you see here on this stock is we're getting very close to threatening 5-year lows. We've seen this movie before. This movie's shown up in a stock called Macy's, where you're not making any money. We've seen it in JCPenney. We've seen it in just so many of these. And so I think as long as we're on the trend of retail, in fairness to all of these guys, unless they dramatically change their business model where they sell anything to anybody and allow their stores as a showroom and a delivery pickup point, I see that as a big problem. And the companies like Target and Walmart, I think you're doing a better job of these, but still this is a lower high down, a big push below zero, and then rolling over just above zero. This is about as negative a PPO as you can get. So this stock really needs to find some push right here, and Walmart is similar.
Sorry. Yeah, we're just going to need to wrap it up so we can get...
Okay, sorry about that. Yeah.
That's fine. We just wanted to wrap up so we could get the summary slide in. I do want to take a quick look at that poll to see how everybody voted. So there's our summary. Got through a number of stocks, though, and I did like this segment. I thought you had some great analysis there technically, Greg, on many of those stocks. And what it tells us really is when those stocks get in the downtrend and are underperforming, we really want to stay away from them.
Yeah.
Okay, so here we go. Which of the following stocks would you all pick as your Monday setup? We got 84 responses here. I knew this was going to happen. I knew you were going to come on the show, Greg, and you're going to steal the thunder. 27% takes the top pick.
Yeah, well, my other choice was last, so we're all good.
Oh, so you want to make sure you're on buzz. Wait, I'm trying to make a comeback here quickly with Snap.
I framed the bracket. Yeah. So.
No, it's all fun. But you won't be here next Monday, so you won't have to worry about how your pick does. But we'll make sure.
Erin will have to take responsibility. So
yeah, you got credit for her. What was that pick? MODN.
Yeah, the second half of the deal was pretty good.
Yeah, not bad at all. Anyway, going to have to wrap up here, but I did want to just say thanks, Greg, for coming on, subbing for Aaron. It's always great to have you on the show.
Thank you.
All right. It is time to wrap things up here. I do want to thank all of you for being with us today. Please remember to complete the survey as you exit. It's located below the video player. We love to get your feedback, hear what you think of Market Watchers Live. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Monday afternoon, everybody, and we will see you back here tomorrow. Happy trading.